Hey there, my name is John Stevenson. Welcome to the Guaranteed Retirement Guy Show. Let's talk about whether or not an annuity makes sense, just given your different situation, your circumstances. You might be wondering, will it or can it benefit you, or is it just something that you should just not waste your time with? So, when does an annuity make sense? Well, there's a lot of times where people are looking for guarantees. It does make sense. And then there are other times where people want more liquidity that it doesn't. And so I actually looked this up and I wanted to kind of share with you some ideas on this. So, all right. So an annuity does not make sense. It says if you need liquidity, okay, well, annuities absolutely will lock up your money to a certain extent. Even lifetime income annuities, if it's an income rider, will have cash value. And if you want to take it out, you can. It is subject to surrender charges, though, so you got to be aware of that. It does have a free withdrawal provision, usually 10%, but not always. It just depends on the annuity contract. And then there are some fixed rate annuities like MYGAs that allow interest only or 10% or none at all. So liquidity is really important. And this is a conversation I have with people all the time when they're looking to purchase an annuity. I always tell them, I said, you need to make sure you have enough money outside of this for savings, because if you don't, the insurance carrier they're going to reject your application anyways. Okay, so that's really, really important that you have ample enough of assets. And typically, rule of thumb is don't put any more than 30 to 50% of your total liquid assets into annuities. But the maximum would be like 75 or 80%. Some carriers will allow that depending on your income and expense ratio. So we can chat about that. If you're near the top part of that spectrum, which many people are, then we can chat about that and make sure you get as much contractual guarantees as possible without damaging your liquidity position. And again, if you're looking for the best annuity and you're not sure where to turn and you're kind of in your research phase right now, or maybe you have an advisor trying to push a product on you, I would recommend that you go to my website, johnstevenson.com, and you will be able to use my calculators and you'll be able to find out what the highest paying annuities are right now. And then when you feel comfortable, if you'd like to, reach out to me because I'd love to help you. All right, so another one is prioritizing leaving an inheritance. Okay, well, that's a big one, but it depends, right? Because there are people that buy annuities for leaving an inheritance. Okay, so what this is talking about is if you're looking for a maximum lifetime income annuity, which is very, very popular and highly recommended, especially if you're looking for highest pension income. And so if you're thinking, well, I really want to leave this to my kids or to a charity or my other beneficiaries, then don't prioritize high income. Okay, look at other options for growth, and you can take withdrawals in the form of income for those as well, but you just have to be a little bit more careful. Okay, so when it comes to maximizing your lifetime income, the account balance and the legacy is just not a high priority for those accounts. So what I would recommend, if you're looking for highest income, buy the annuity that gives you the highest income. And I'll show my screen here in just a second so you can see what that looks like. I would prioritize using your assets just for that. Okay, when you're looking for income, prioritize that for income only, and then use your other assets for legacy and for growth. Okay, so it's good to separate them out so you get the best of both worlds. Okay, so another one is lack of flexibility, making them unsuitable for younger individuals or those seeking access to cash or high-risk investments. Okay, so that's a mouthful, but I do have people that reach out to me who are young. They're in their 30s or even early 40s, 41, 42, 43, and they're like, all right, I want to buy an annuity right now, and I want income in like 10 years. And I just let them know, I says, yeah, I could sell you an annuity, but you're kind of young. Do you want to be in an annuity right now, or would you like to have some more growth from the stock market? Now, of course, I'm not an investment advisor. I can't tell you what to do with your money. But I always recommend when people are younger to save and invest and use those years to compound and grow, because if you're 20 years away from retirement, then you should probably use those years to make as much as you possibly can. And some people are like, well, I just don't want to be in the market. And I get it. Like, you don't want the risk, you don't want the ups and downs, but there is a risk of not being in the market as well, in my opinion. Because if you're not in the market and you're not capturing those gains, then you're also at a risk of not outperforming inflation and giving yourself the best possible retirement later on. So there is obviously a risk-reward ratio, but the thing is even when markets take their dumps, and they will. It's not a matter of if, it's when. Okay. And you just have to accept that. You got to accept that markets it's going to drop. Okay. And it might be a small drop, like 5 or 10%, or it might be 20 or 30%. We've experienced those several times, and we will continue to do so in the future. Okay. Those are great for market resets. Okay. And they're great for people that, especially that have money on the sidelines and they want to invest when the market takes those dips. And of course, that drives the market up higher. So it's not great for people who are retiring in 3 years and they're like, no, I can't handle that, which I totally agree. When you're getting closer to retirement, you shouldn't be in that, in my opinion. If you're looking for guaranteed income and you want to lock in high rates, you should be looking at annuities right now so that you can lock in those rates either for income now or deferred out. So if you're young, you absolutely can buy an annuity. I do sell annuities to people who are younger, but it's usually on a limited basis because usually sometimes they get an inheritance and they'll use that inheritance maybe from a qualified IRA. They inherited, they got to liquidate that in 10 years. Then they'll throw it into like a fixed rate product. And I helped a lady with that last year. And it was great because she already needs to liquidate that inherited IRA, but she wanted some growth along the way. And so I was able to help her with that. So there are ways to get growth and protect yourself from market risk in even fixed index annuities. But again, if you've got like a 20-year time horizon, just think about how much growth you'd like to have from the market and from higher risk investments versus annuities. Annuities are awesome and they give you lots of lifetime income and they got some really good growth for guaranteed income. And sometimes it does make sense. But really the best way to find out for yourself is to just go to an investment calculator and plug in your numbers and say, all right, what will this look like? If it earns, 10% over the last, the S&P's done that over the last 100 years. So if it does that for the next 10, 20 years, what would that look like for me? Okay. So if you look at that and say, all right, well, how does that compare to this income annuity, right? And you might look at that and you can know if you go to my website, check out the income rider, okay, plug it in and you'll see exactly what the payout would be from that same amount projected out 10, 20 years, okay? And then you'll know exactly if it's worth it or not, okay? And then if it's worth it, reach out to me, okay? I'd love to help you. So I'm not trying to sell you anything, but I do want you to kind of see the pros and cons. And annuities are great as far as having a portion of your portfolio for guarantees, okay? I never recommend that people put all of their portfolio in it, even though a lot of people want to. It's nice to be able to have savings that are growing and other investments that are growing outside of that as well. It just allows you to be a little bit more balanced, get more out of the stock market if you want to, or other investments, and still have the guarantees that give you the peace of mind, which are so important to our retirement. So let me share my screen. I promised you I would, and I want to show you exactly what an annuity could do for you. All right, so if we're looking at $500,000, married couple in Florida, 60 years old, and they're taking immediate income from $500,000. So they didn't give it any time to grow, but they still want immediate guaranteed income. Okay. So based off of that, you can see all the rates right now. These are annual income numbers. Prudential's beating everyone right now, followed by Symetra, Corebridge, Nationwide, and so on. So you got all these different carriers. And this is showing all the options from all the carriers. Let me just clean this up a little bit so you can see even more. So there's a lot of different, and this is just the first page. But you can see there's a pretty decent selection, and Prudential happens to be the highest one. If we look at this, we'll see the income and we'll see the account value. And you notice the account value, even with growth, okay, it will probably last till you're 77 if you take this immediately at 60, okay? The income, though, continues for the rest of your life, and that's what it's for, okay? Again, if you're looking for highest income, it is absolutely recommended. Now, if I go back here and say, well, I've got $500,000, but I don't want to take income till I am 65 because that's where we're going to take Medicare, which is very common with a lot of people, then it's going to give you more income. And you can see here, Nationwide is actually beating Prudential out. Prudential, let's see, where are they? Are they here? There they are. 45,815. They're pretty good, but not as good later. Okay, they're the highest for immediate, but not as high as others if you defer it out. Okay, so Nationwide, we see Nationwide and say, all right, well, that's pretty good. $52,000 per year guaranteed for the rest of my life and my spouse's life. So that works out pretty good. So when you look at the guaranteed numbers, they show you if there's no market growth, meaning there's no index growth, no account value growth, you just have straight withdrawals, then your account balance is out by the time you're 72, 73. but the income is guaranteed. Then it shows you the income still is the same, but if it has some growth in here, then your account balance lasts like 3 or 4 more years. That's the only difference between hypothetical and guaranteed values on these guaranteed lifetime income contracts. Okay. Really what you're doing is you're buying a pension that's worth $1.6 million if you live to 95. If you live longer, it's worth more. So, and you're buying peace of mind. And it's hard to put a price on that. I have arguments all over the place where people are like, annuities are horrible, they don't have good growth, and blah, blah, blah. And I totally understand. Like if you're only looking for growth and that's all you want is just growth, then yeah, they're not the best. Okay. Go put it in a stock. Go put it in some other growth vehicle. Okay. You absolutely, over time, as history shows, you will do better being in the stock market. Okay. But if you don't like the risk and you don't like the roller coaster, then there is nothing that compares with a guaranteed annuity contract. So annuities are great for income. They're great for providing protection, and they're definitely, they have very good growth options that don't beat the stock market, but are still very, very decent. You can get a fixed index annuity that averages 6 or 7%, or maybe even 8%. Okay. And then you can get a MIGA right now. MIGA rates are great. They're between 5 and 6%. And that's really great when you're looking for a fixed rate of return. Definitely won't beat the stock market, but it does give you that peace of mind, especially when the market takes a dump. You're not sitting there stressing about it. So anyways, if you're looking to purchase an annuity, I would love to help you. And if you'd like to, you can book a call. There is a link below this video. It goes directly to my calendar, and we'll get on a Zoom meeting and chat. Otherwise, you can go to my website, johnstevenson.com, and you can book a call right there as well. So I'm not going to try to hard sell you anything. No one likes to be sold. I don't like to be sold, but I will show you all that is available. And of course, if you're looking to purchase with me, I'd love to help you. So I am a certified financial fiduciary, and that means that I have to show you everything. Okay, I have to show you everything regardless of what my commissions are. So my commissions are high or low. It's all over the place with a lot of these annuity contracts. But it's a lot easier to be transparent if you just show what's available so that people can make their own decision and not feel like they're being sold into something that they're not really sure about. So I hope you feel that sincerity, and I hope that hopefully this video was helpful to you. And if you have other questions, comment below. Make sure you like, subscribe, share, and of course, explore the other videos on my channel. I've got a lot of them, and I really try to dive deep into these subjects because it's really important to people who are retiring right now. So hope that helps. I appreciate you for watching, and we'll see you next time.